Good evening, friends. It's a very pleasure to have you for a session. This is our first session in Navi Mumbai of Real Estate Study Circle. We're going to start this session by 3:45. We'll have a presentation of half an hour and followed by panel discussion. Thank you. Good evening, friends. As per the protocol, we have to start this session today. So today is a very interesting topic that we're going to speak about on alternate multiple funding option for real estate developers in Navi Mumbai. As we see right now today that the market scenarios over here, demand is not a challenge in Navi Mumbai, and with a lot of developers over here, with a lot of lenders looking with the infra boom that is coming over here. So they are eyeing multiple projects here. There are a lot of areas which are coming up in upcoming that are into development, like Dronagiri is one, Pushpak Nagar is one. So there are a lot of government policies that are coming up, abiding to which a developer has to make a project in such a particular timeline. But being demand is not a challenge in this particular location. So how to manage a cash flow and also create a name, and at the same time there are multiple avenues which are there to fund the projects, which the most of the developers are yet not aware about. AIF is one such thing which in the western side there are a lot of case studies that has happened where the AIF has successfully funded under construction redevelopment projects in the pre-RERA funding stages, and they've successfully executed. Like in Chembur, there are multiple places where people are identifying, which is a very good growth centers. Borivali, Kandivali, it is already a epicenter right now for redevelopment. Navi Mumbai right now with the plans, smart city development is going on. So that is the core gist about this topic. We have three expert speakers who's going to join us. This event is today is sponsored and supported to us by CS Sagar Parekh sir, founder of the Construction Finance Advisory. So he'll be having a presentation followed by some case studies about models on which the funding is right now viable option for Navi Mumbai developers. And it's a very booming market, and yet it's an emerging market. It is in an evolving stage right now, where there are a lot of interest and curiosity from people, from developers across different micro markets. But because of the kind of the infra boom it has seen in over here, and with the opening of Navi Mumbai airport, I think there are a lot of real estate market will be quite vibrant over here. So I'll just quickly give Sagar sir's introduction, and then we'll start this topic presentation. We have a few more developers coming over here for the session, so they'll be joining us in a while, so we can begin it in the meanwhile. So, Mr. Sagar Parekh sir is rich in experience in commercial real estate transaction and managing portfolios. He has seen many ups and down swings in real estate over last 2 decades, working in many real estate complex transaction of structural debt, construction finance, LRD, and many other. These deals span across real estate ecosystems such as residential, commercial, hospitality, and warehousing. Hotels, hospital, education. He has an extensively dealt with all categories of real estate developers across tier 1 and tier 2 cities. Sir has a rich experience of 2 decades in CRE, banking and consultancy. In his previous stint, he has worked with esteemed organizations such as ICICI Bank, RBL Bank, L&T, Aditya Birla Housing Finance, Mahajan, and many more for it. So we can quickly have sir on stage and start. Request him to start the presentation for today's day, and start our first session in Navi Mumbai of Real Estate Study Circle. Real Estate Study Circle is one of its first B2B platform for working professional architect, developers, contractors, chartered accountants who wants to upgrade and upskill themselves, for which we have started a very innovative knowledge series, workshops, seminars and programs where we call professionals from the developers, from chartered accountant, advocate, from government officials for them to learn. And we have seen a very good encouragement for a session because we are one of its first in India who encourage peer-to-peer kind of a learning. And we want to take this ecosystem across India. So this is our first session in Navi Mumbai, and we hope to have many more such sessions over here with like-minded professionals. Thank you. So please give a big round of applause for Sagar sir. Sagar sir, over to you.
Good afternoon, friends. Welcome to today's topic of smart funding options for Navi Mumbai developers. In this, I hope am I audible? Uh, in this session, I'll be trying to cover fundraising strategies available to developers, options and strategies available for developers, and how one can raise funds from institutional investors. So let me begin with Navi Mumbai history. So originally Navi Mumbai was envisaged to be satellite city, but over a period of time, it has become one of the primary economic hub. Thanks to all good infrastructure projects being undertaken, primarily of them Navi Mumbai Airport, Trans Harbour Link, road and bridge network, metro rail network, and the railway connectivity. Right. So what happens? This gives impetus to a lot of real estate activity to be undertaken by a developer, and so for a developer, it generates a good real estate demand, right? So now the question is, if developer has to undertake in so many projects, and in that case, developer would need the capital. So what is it? That's a challenge, in fact. So how do we overcome this challenge? How do we address this challenge of raising a capital through institutional investor? So if a developer has to undertake any project, the cost of the project can be divided in five broad heads. One is land acquisition, other is statutory premium, of course the construction cost, the finance cost, and the operational overheads. Now, if you see, land acquisition itself is involves a lot of investment to be done by the developer. Okay. And at the same time, statutory premiums are also needs to be paid right at the beginning of the project. So this involves a lot of investment to be made right at the beginning of the project, whereas the cash flow from the project would start only when the project picks up and it comes at a certain stage. So there is a gap between the investment happens and the time the project starts yielding the cash flow. So that is where there's requirement for arranging a capital. So the challenge is how do we address it? And the answer to that is the institutional investor, tapping institutional investor, financial institution for arranging the capital and debt funding. So as we discussed that it involves a lot of capital to be invested right at the beginning of the project life cycle. Who would do that? So to answer to that query is the alternate investment funds. Okay, the alternate investment funds comes with the utility of they can come right at the early stage and right at the land stage you know, and so so you know, so they will participate in the land stage. They can also fund for the approvals. Now, these alternate investment funds comes with their own mandate. A mandate in terms of geography to be tapped, the developer pedigree which they will be dealing with, the quantum of investment they can look at, the cost expectation and IRR expectation with them. So like a mutual fund, okay, there are different kind of alternate investment funds. They have some of the funds deals with, they want to deal with only with those developers who deliver about 10 million square feet. Some of them will deal with only with those developers who deliver about 5 million, likewise 3 million or 1 million for that matter. And there are also funds who can invest where the developers had delivered about 3 to 4 lakh square feet of construction as well. So, because they bring such a flexibility and they can come at initial stage of the project, they are it's a need of an hour actually, right? The next funding avenues are NBFCs and banks. We can have an interaction also. We can raise a query wherever you want to. We have some query, we can answer those queries. So banks, if you see, they are traditional source of funding. They give funding in form of debt for the construction of the project. They are governed by their own internal metrics, risk metrics, and RBI mandates. They come with a competitive interest rate. That is what their utility is, and they can fund a sizable quantum of the quantum required and suits the needs of the project. Okay. Whereas NBFCs, they also fund the debt funding, but they will be offering the flexibility. Like they can come pre-RERA stage. They can offer funding for approvals as well, and traditional construction as well, and also they can give you a takeout. Okay, so we'll be taking up a few of the case studies, going for as we go ahead. I'll be explaining as to how they have funded. So these are the transactions which we did in this market. Okay. Now, this particular developer had delivered about 4 lakh square feet of construction, okay, and he got an allotment for CIDCO, okay, and they wanted to raise funds for making payment to the CIDCO and acquire the land. Now, what happens, raising funds with limited expertise or delivery track record, and that to a land component was a challenge. So what we did, we analyzed their portfolio. And we realized that they had a couple of their projects unencumbered. So we took this to the NBFC, and we requested NBFC to have a look at and analyze the other unencumbered project, and give a cash out to this developer, with which the developer was able to acquire the CIDCO land. And it was it was a good structuring which involved, we took under other unencumbered project, with which he was able to acquire a CIDCO land. Next one is, one of the transactions which we did, wherein this developer had delivered only 2 projects, and he was he had other manufacturing business which was going on. It was yielding a good return for that from that business. Now he got allotment from CIDCO for this particular land, and he wanted to raise funds for to acquire this CIDCO land. Now challenge was to raise the funds for this particular developer with 2 the experience of delivering two projects. Okay, so what we did, we analyzed their position, their development position, and the other manufacturing business parameters, and we requested NBFC to look at draw comfort from this manufacturing business cash flows and arrange cash out for to acquire the Sidco land. One more transaction which we did, it involved a good amount of restructuring. So what happened was that this project was already funded by one of the nationalized bank, but it was underfunded project, okay, and because of which the project was suffering. Now, when we analyzed this project, we realized that this project would need at least 3x of the capital or debt funding to sustain and to come up again to its full swing. So we requested the NBFC to have a look at this project, analyze it, and we requested NBFC to look at this revenue potential and sales which is already made from this project, okay, and give them 3x of the funded, which was already funded by the nationalized bank. And the NBFC obliged and funded 3x of the original amount. Okay, with which project came back again to its full swing and it is doing well. So what happened because of this structuring, even had not happened, the bank would not have been able to give additional fund because otherwise it would have been restructuring that account. Okay, the developer would have been stuck and project would have been stuck. So with this structuring, all the stakeholders are happy now. And the beautiful part of the particular structuring is that it is not a restructured account in the books of their NBFC. So that's a beautiful things which with structuring which had happened, right? So these are the three case study which I discussed with you for the benefit of majority of the developers around, right? We have even other options as well which we can offer, right? So right from land funding, let's say, if a developer has a pedigree, okay, which we discussed, it can be, 2 lakh, 3 lakh square feet, 4 lakh, 1 million square feet. So depending on his need and requirement, we can approach AIF and arrange the funding accordingly, right? We can do a special restructuring, okay. Let's say if project specific, there are, as we speak, they wanted to cash out, okay, to acquire a land, or, they cash out, you want to use for the other ongoing projects, okay. Then, we have a solution as to how to deal with it, and we can arrange, funding accordingly. Of course, we can do construction funding, plain vanilla construction funding, required for the, functioning of the project we can look at. We can do a rollover transaction as well, okay. So, let's say if project is funded by an NBFC and for some XYZ reason, it needs to be rolled over, okay. But if this reason, the reason is bailable, right? Upon restructuring, the pain point of the project gets mitigated, we can do that restructuring as well. Acquisition funding, let's say if a developer has identified some asset, okay, and it is strategically fit in their portfolio to, to enhance their, requirement of the group as such, you can arrange the acquisition funding also. Stretch funding, okay. There are few fund houses, which do a stress funding as well. Okay, my friend Praful is here. He would be able to give better insight into it. Okay, but if the stress is available, okay, and if this fund house is convinced that upon bailing this stress account, again it will be coming back to its own full swing. This stress funding can happen. Of course, the lease rental discounting. Okay, if the project is yielding lease rentals and it needs developer wants to capitalize on this particular lease rentals, we can arrange lease rental discounting. We can also arrange a structural lease rental discounting, meaning we can arrange funding against the value component of the asset besides the regular lease rental discounting, and arrange cash out or capital to the developer for further to expand their business. And of course, inventory funding in lab, let's say if you have ready inventory or near completion inventory, okay, and if you need to capitalize these inventories, we have a solution to arrange inventory funding as well. So, in a nutshell, there are a lot of, funding options available. Okay, so what this institution would look at, whenever they analyze any particular developer for that matter, okay. So, there are famous 4 C's of the, funding. So, in real estate parlance, let us understand what these 4 C's fundings are. They are character, capacity, collateral, and capital. And real estate parlance, the character means, the vintage of the developer, how many projects he has delivered in the past, okay, what square footage they delivered in the past, if he's a champion of that particular micro market or not. Okay, and otherwise, how is his credit worthiness, delivery track record, whether he has taken debt in the past and how he dealt with it, whether there's funding taken and repaid on time or not. All of this, comes, developer would want to, institution would want to have a look at. And this is a qualitative point and very important point from an institution from institutions, funding perspective. Then comes the capacity. The capacity means, if this particular underlying project is would be able to generate sufficient cash or not, okay, and whether this particular project would be able to repay debt along with interest on time or not. So that analysis happens. The collateral, any lender would want to have a sufficient value of the underlying collateral has to be sufficient enough to cover the lending risk. Okay, so this involves analysis of particular this underlying asset, their due diligence in terms of technical due diligence, legal due diligence, etc. And the capital. So any developer would want, any financial institution would want to know as to what is the overall financial position of this particular developer. Okay. Meaning, if in a particular project, how much has he invested, what is his skin in the game or not. And they also analyze other ongoing projects and other business parameters of this particular developer, and basis which, they take a decision as to how to go about this particular developer and how to fund this particular project. So, with this, I would like to, conclude my presentation, and I'm happy to take questions from the audience, in case you have any.
Sir, you mentioned about a developer who has purchased a land from Cisco. How much finance you got him arranged?
So, let us take an example. Let's say Cisco land allotted about 100 odd crore. Okay. Then any institution would expect at least 50% to come from the developer.
Okay.
And 50% the rest of them they can contribute.
So that amount goes directly to Silco, and balance 50%?
Yeah, it can be paid directly to Cisco also. Not an issue. One more, there are options, this funding available for redevelopment project as well. I'm particularly mentioning because redevelopment is picking up in Navi Mumbai. We understand that, Navi Mumbai, there is no underlying land come as a security, but the funding can happen basis the development right, provided if, society allows to mortgage development right of the developer, there has to be specific permission about it, and without any liability to society owners, society, we can arrange that funding. Okay, so that can happen. Funding can also happen for self-development project, provided the contractor comes as a borrower, and he should be able to, and he should assume a RERA risk. If that happens, funding can happen for self-development project as well.
What is the rate of interest nowadays for the construction finance?
So rate of interest depends on a lot of underlying factors. Okay, right from pedigree of the developer, meaning what vintage he enjoys, how many square feet is delivered till now. So rate of interest for, let's say, Godrej, for that matter, would be different from, he would be raising in single digit, right? The single digit fundraising for pure construction funding can also happen for a seasoned developer in Navi Mumbai. I know offer had gone to developers.
Give us the brief, what is the rate of interest?
So I'll tell you. So rate of interest, right from 9-10% to product available up to 24% as well. So let's say if you go to the AIF funds, okay, then fund IR expectation would be upwards of 18%, 18, 20 to 22% as well. So any AIF fund we go to, it is going to be that. If you go to NBFCs, the rate of interest is going to be about around 15%, plus or minus 100, 200 basis point. And the banks, 9 to 12%, depending on pedigree and underlying parameters.
Any fund available to accommodation reservation also?
Sorry,
Any funds available in accommodation reservation?
accommodation reserve.
The municipal corporation balance plot for free sale, something on those notes.
So I'm not getting you.
Talking about PPX. I'm talking about accommodation reservation.
Accommodation reservation policy. You want to have a look at?
There is a accommodation reservation policy where certain portion of the land has to be surrendered to municipal corporation. So the balance plot you can develop. So something on those notes, some NBFCs
Can happen, yes. So NBFC would look at that's an obligation on your part to deliver that particular portion to the institution. So barring that particular portion, okay, if they will consider your development portion minus the portion you need to hand it over, and basis which they will be calculating the receivables and basis which they will be taking a call.
So any principal sanction or something of that kind? On the
So I
basic
need to
of
understand
the
complete details about this particular case, and then only I can give you
we
solution.
can discuss.
With how many banks you have tie-up?
Sir, I have been in this industry for the last 2 decades. I know each and every institution who are funding right now. So the length and breadth of the market is right from 5 crores to 200 crores and upwards. Funding happens in the real estate industry, and interest rate, I told you, right from 9-10% to 24% interest rates are there. So that's the length and breadth of the market which is there, right? And depending on project requirement, developer profile and merit, we can suggest an institution where you can approach.
Okay, thank you.
In case you get IOD, can you get the finance on approval of it? On
So
IOD
in
itself?
the Mumbai
Redevelopment.
redevelopment. So no institution would want to take a risk of vacating a tenant. So if IOD comes and tenants get vacated, from that point onwards, options are available to arrange the funds.
Sir, in case of a redevelopment of projects, normally the society do not agree for mortgaging their land or rather development rights. So is it possible to arrange a finance against the saleable component of the developer, which is a free sale component?
Of course, yes.
Because that would be easy.
Of course, yes. That is what is happening.
Slowly you take the NOC for the respective sale of the flat, and you can design the escrow account and all that system. But that would appears to be a more comfortable to the society as well.
So that is what, to answer to your query, of course the funding can happen basis the development right of the developer, but provided there has to be a specific clause allowing a developer to mortgage portion of the development right. That has to be there in the development agreement. Okay, and so we understand the land would not be coming as a mortgage, but society should agree that developer would be taking a funding on this particular development right without any liability to them, and they should agree to it. So we understand why. So main motto of doing this session was to educate developers on the AIF. Okay, so lot of Sidco is allotting a lot of land to the developer, and what I understand, right now in this market, developers are raising quasi equity to generate a land component part for making payment to the Sidco. Right. So, what we understand, rather than going to the quasi equity, okay, AIF can fund and then participate, for the making payment to the Sidco. And one should not have a misconception that it's only AIF deals only with the developer who's delivered about more than 3 million, 5 million square feet. If developers deliver 1 million square feet of construction, there are AIF available. If developers deliver 3 to 4 lakh square feet of construction, there are AIF available. So options are available to them.
So say for example land funding actually. So NBFCs give land funding and AIFs gives land funding. So who is better in this, NBFCs or AIFs?
So NBFCs are not allowed to directly fund the land. That is not allowed. RBI barred the NBFCs to lend NBFCs to fund directly to the land. Okay. What NBFCs can do, they can take any other ongoing project, unencumbered project, and generate a cash out to be paid to the Sidco. And AIF are allowed. AIF definitely are allowed to participate in the land component. They are meant to do actually, for land arranging funds for the land component.
Okay, sir.
Sir, once I paid 50% to Sidco as a first installment, how fast you get the second installment? How fast you get the loan for second installment?
See, we can do a process simultaneously. Okay, we can have the sanction done simultaneously as and when you approach. You are in the process of acquiring a land. Okay, so that can quickly be turned. About 30 days, it can be turned around. That's not an issue. So it's not going to take that longer time for for due diligence and all. We are experts, so we know how to navigate about it. Fine. So I conclude my presentation here, and we'll be starting with the panel discussion in some time. We are waiting for for the dignitaries to come.
We'll be starting the panel discussion at 4:30. We are expecting Advocate Amit Mehta sir to come reach over here. So he have just called him. He'll be here by 4:30. So 4:30 we'll be having a panel discussion where we'll be deeply discussing about the challenges and the opportunities and various fund houses that who can look to fund these kind of projects majorly into plotted land developments and into redevelopment housing. So we'll start that by 4:30. In the meanwhile, if you all have any queries, you all can address directly. So we'll be starting that in 10 minutes time from now. Good evening, friends. As expected, Advocate Amit sir has arrived. So we can start the panel discussion now. So request everyone to be seated on the chairs. We're just starting with the panel discussion. After this, there is a high tea session over there. So you all can, it will start from 5:30 onwards. Tea. Okay, so we'll be starting the panel discussion. So I request to invite our esteemed panelists for this session. Architect Siddhant Kade sir, please come. Sagar Parekh sir, please join. Mr. Praful from NICES would request you to just join for the panel discussion. And we have our today's special guest for the session who's come all the way from Koregaon just to ensure for this, contribute to this noble cause for this session of us. So request to invite Advocate Amit Mehta sir for the panel discussion. Request everyone to just give a round of applause for him. We request everyone to be seated. After the panel discussion, we can have a question answer session, and then we can proceed with this. So before the panel discussion starts, I'll just quickly do an introduction. I'll just introduce to the speakers, and then we can start with the panel discussion topic for this session. We have architect Siddhant from Entity Architect over here, who is going to guide us. It's an experienced and passionate firm with focus on providing high quality architectural service to all types of base builds. It was founded by architect Siddhant Khade, who has been in this field since 2013 and has a rich work experience with prestigious multidisciplinary consultant engaged in AEC industry. Entity Architect has been in operation since 2014, indicating that it has been time to build up a wealth of knowledge and expertise. It's a firm that is committed to provide top-notch architectural services to its client, and experienced leaderships are likely to be valuable assets in achieving this goal. It has expanded expertise into multiple sectors of urban development, including infra, housing, and hospitality. Next we have Mr. Praful from Nices Finance. Praful sir is leading the sourcing and execution of investment opportunities, overseas asset allocation. Prior to his current role, he held key positions at Indiabulls Investment, SBM Bank, L&T Finance, where he spearheaded investment sourcing, appraisal, and asset management for real estate loan and investment portfolio valued over 500 million. His contribution includes successfully raising $100 million funds through capital market initiatives at SBI Capital, Brick Eagle, and Creda Venue. He holds a BTech from VJTI and is a CFA chartered holder, and earned an MBA from NMIMS. And our last speaker for the day, Advocate Amit sir from Soliex. Sir is a managing partner at the law firm Soliex, and one of the largest law firm in India today. The law firm is a pioneer in redevelopment and handling largest project and cluster in Mumbai. He has completed his engineering from Pune University. He is an MBA in finance from Leeds University Business School, International Trade Management from NMIMS, and Merger and Acquisition from London Business School. He is a leading lawyer in India today, especially in field of real estate. He has been nominated by the Cabinet Minister of Technical and Higher Education of Maharashtra, representing the state as an academic council member of National Law University. Sir has been an independent director appointed by SBI in Bright Outdoor Media Limited. He was part of RERA drafting committee with Joint Parliamentary Committee for drafting the RERA bill for Union of India. Recently, he was honored with Pride of India Award at the glittering ceremony in Chicago at the hands of Indian Consul General in Chicago, Illinois. Apart from International Excellence Award, biggest brands of India Award, Best Legal Firm by Economic Times, Maharashtra Gaurav Awards, and many more. So these were the profile of our expert panel for today. We would be felicitating them today, so please would request everyone to give a round of applause before starting the discussion. Hello, hello. Hello, hello. Yeah. So today's panel discussion topic, which is there today, the unlocking growth through innovative funding models. So it is about addressing market challenges, future growth corridors, investment outlook in Navi Mumbai, and what are the opportunities available over here. So we'll be starting this quickly with our first round of panelists, architect Siddharth, currently. So the first question to you from our side is going to be like with the rapid, as you are aware about, there is a lot of infra growth that is happening, which is being highlighted in the media in the recent times. So there is airport which is happening, metro is there is coastal road, there is trans harbor link. So from the participants, we wanted to know very specifically that how are master planning and architectural design evolving to attract both end users and institutional investors over here. So what kind of an architectural design point of view right now do you think is right now apt for the developer community to work on?
Yeah, good evening. As everyone knows about the development, for any kind of development you require the hello. Yeah. For any kind of development you require the infrastructure. The major infrastructure requirement is the road. And as you are aware about the MMR region, MMR is spread around 6,23,000 square kilometer. That is the use area. And if we are looking at the center point of the MMR region, that is the South Bombay, and if you look at the Navi Mumbai airport area and the surrounding area, that is only the 35 kilometer away from that center point, and which is connected by the 29 kilometer MTHL road, that is hassle free and the traffic free. To reaching to that area is only 20 kilometer. Reaching to the Navi Mumbai region is the matter of only 20 minutes from the South Bombay or center, that is the core area of the MMR region. So already the government is taking care of the all infrastructure to develop that area, and if you can see, the MMRD is trying to cover the entire ring road in the terms of the MMC multimodal corridor, that is the 126 kilometer total connectivity passing through the Vashi Virar to the Alibag. In between we are having the provision of the metro lines, and from the Navi Mumbai region you can connect to any part of the MMR region within 1 hour. That is the advantage of that area. And as you can see, Tilco is trying to develop those areas in the terms of the ITP and the TPS scheme. The TPS scheme stands for the 60-40 model. They will give you the 40% model, 40% land area with the 2.5 FSI, rest of the 60% they will take away to develop the infrastructure as well as the parallel growth center area to sustain the cities and make the economy within the city. It is like an integrated planning evolution and the planning ecosystem which they are trying to develop. And it is a bigger advantage for a micro level investment as well as the institutional development and the investment. As you can see, the CIDCO has already published 3 to 4 different areas for development and the investment. That is, one is the Aero City, that is spread around the 667 square kilometers, 667 the acre area. Edu City, they have published currently, that is on the 250 acres with targeting the 10 universities from the international market. They have already signed up the MOUs for the 5 universities with that area. Medicity is also there, and the corporate park by the CIDCO, that is also spread around on the 120 acres area. Also, Reliance is also coming up with the 500 acre corporate park within the Mumbai region. That is going to be a boom-making market near to Navi Mumbai airport, that is, which we can see and target. And this is going to be a good investment opportunity within the 10 to 15 kilometer radius from the Navi Mumbai airport area. And this is going to be a greenfield development and greenfield investment opportunities for everyone. So that's a takeaway from me. Yeah, thank you.
Great. So that was quite insightful to know. So we would like to understand one more thing from this is that with the CIDCO's evolving land allotment policies and NENA and MSRD's push for planned development, how do you see growth around Navi Mumbai airport that's coming around? With so much of in the media, it has been highlighted about the development happening, and with the over here with the opening of there, a lot of Europia it is there. So these are the specific things that we would like you to talk about.
Yeah. The NINA and the MSRDC both are appointed as an SPA, Special Planning Corporation, to develop the modern cities equipped with the required for the further development. So NINA is already sister concern of the CIDCO. So they are already having the good experience of the city development for last 50 years. And CIDCO is the private limited company owned by the government. So there is no issue of the funding and the development experience. So it is going to be a good market and good investment opportunity as well as the planned city. This is going to be a sectorial development. So it will carry increasing your population growth and all with the extra needed amenities and the facility. As well as the MSRD, if you see at the MSRDC region, their major land banking is with the investor. And as you can see, the development coming up is like with the big developers. L&T is there, Wadhwa is there, Hirandani is also there. So this is also going to be a good market for a second home. And I can say Panvel was an option, initially was an option for a second home. Now it is becoming option for a first home. There we can see the development and the choice. Thank you.
Okay, so that was quite insightful from your side. So we know about the various policy pushes. We will be quickly, because we have a schedule to follow, so we'll be quickly moving on to with Praful. So from the finance point of view, so I have one particular question which is there. So we wanted to understand what kind of funding structures does like AIF structure debt works best in context of Navi Mumbai's land approval framework?
So typically for any real estate project, there are certain funding structures. Some of them are conventional, which is your bank and NBFC-led financing, right? And they would be lending in the form of loans. They'll be ring fencing the entire asset, the entire cash flows that are coming out of the project. And basis that, they will be giving funding to the projects, right? But all of this, if you look at how RBI has changed the policies and ensure that there should not be any concentration of lending by NBFCs and banks towards real estate projects which are under development, right? And that's why the need for AIFs have come up, right? So today, as we speak, as per SEBI data, almost 15 lakh crore of investments have been routed through AIF, right? So bank, of course, they are financing a major portion of the real estate funding, which is your construction finance, home loans, and your LRDs, right? Bank credit to real estate sector stands at about 35 lakh crore. Whereas what has happened on the AIF front, last 10 years, the figures have moved from 1 lakh crore to 15 lakh crore, so almost 15 x amount of growth on AIF front, right? Now, within AIF, there are Cat 1, Cat 2, Cat 3, as Sagar had mentioned. There are different categories of AIF funds, right? Cat 1 fund is specifically towards SME, infra, and social venture fund, right? Cat 2 is where largely the real estate funds, focused funds sit, right? And here Cat 2 has a flexibility of either doing a debt instrument or a equity instrument, right? So within the AIF space of 15 lakh odd crore, 6 lakh odd crore has already got invested, right? Of which within real estate around 4 lakh odd crore, so around 66% of your AIF Cat 2 money is getting deployed into real estate, right? That's a very large amount in comparison to any other sector, right? So real estate stands first. Second is your NBFCs. Third is your ITES sector, right? So AIF, the way regulators are moving, right? And we need to take a cue of how the development requirements of developers has changed over a period of time, right? Initially, what used to happen was developer would launch one project, right? Reap benefits out of it, and at the same time, through the internal accruals, acquire new land parcel, right? But today, when you have a certain set of developers which are probably have a pedigree of delivering, of existing, and having a vintage of over 20, 25, 30, 40 odd years, all your capital pools will move towards a certain set of developers, right? But within AIF, the funds have the flexibility, right, to lend to proposals by mid-sized developers as well who are looking to start a project, right? So it gives you a lot of flexibility in terms of availing funds. And this next thing about AIFs within the, after the real estate space also, if you look at other funding structures, is your private debt, right? So private debt could be institutional debt, right? And most of the AIF structures will be lending in the form of a non-convertible debenture. It is a type of instrument, right? But there are certain compliances related to it, right? So AIF is streamlining, and AIF investors are having a risk profile which is much higher than your typical bank or a NBFC or a conventional lender, right? So they are absolutely in sync with realities of real estate development, and basis that they are able to deploy funds into such projects which are early, mid, late stage, right? Apart from the AIF funding structure as well as your bank and traditional funding structures, REITs have come up, right? So SEBI's notification and
Hello.
the consultation paper in early 2012, right? Finally, we have seen 5 REITs getting listed, right? So within REIT sector also, within REITs, you can pack a ready asset, be it a commercial asset, even within housing. If it is a rent yielding housing, we'll be in a position to pack it under a REIT, right, and get institutional capital to invest into the asset, right? Yeah. The third model, the funding structure that we are seeing in over the last few years is a platform level funding, wherein a good developer partners with a fund, right, and they come up with a certain identified mandate of, let's say, acquiring land, right, with some initial capital being put by developer, and this will be done maybe on certain geographies across 5 to 10 portfolio investments, right? So even that platform level funding, which is what it is called, is also we are seeing platform level funding also picking up very well.
Perfect. So that was also quite insightful to know for us. But we would also like to understand one more thing from your side, was that a real estate developer, when you speak about, so how can he partner with AIF to resolve special situation assets or projects? What's your outlook on the exit timelines and the yield expectation in 2 or 3 years from now on?
So we at NICES, we consider ourselves as turnaround specialists because we are able to deploy capital in stressed projects as well, right? So in stressed projects, there are two types of funding that can happen. One is acquisition related funding and one is your uh, settlement related funding, right? So in acquisition related funding, what happens is a promoter uh, is looking to invest into a stress project, right? And for that purpose, we'll have to create an entity which is in a position to raise finance and fund the acquisition, right? So the asset could be of two types. Either the asset is sitting in an NCLT or it could be sitting with a bank where where they have come up with a SARFAESI auction process, right? And there's an intending promoter who's ready to commit some capital and is looking to partner with a AIF. Now, it is very important to understand that funding this is not the end game, right? It is the start of the entire process, right? So how do you kind of tie your funding with a exit plan by monetizing the asset, right? So we at NICES has done stress funding across geographies. We understand what it takes, right? We understand the regulatory requirement, we understand the structuring requirement, and there are so many stakeholders involved in a stress project because there's an existing lender who is looking to exit, right? So he's almost at the end of his patience timeline, right? You need someone to come up and fund the incoming promoter to take over the asset and see a turnaround happens, because once the asset yields cash flow, only then a fund who is investing into a stress special situation funding can get an exit. Whereas the other bit is basically resolution, wherein the existing promoter has done an OTS settlement, right? So he has a letter from a bank, financial institution saying that the said loan is getting settled at XYZ amount, right? Now, out of this XYZ amount, certain will be put through the promoter. The remaining would be required to be put by a fund like us, right? So this is how we can tie it up end to end with existing promoters as well as new promoters who are looking to acquire an asset, right? But most important in funding stress situation is to have your exit plan ready on day one. This goes very well for the funds who are funding it as well as the developers who's looking to enter such assets. Yeah.
Okay. So that was
So you had mentioned about what is the visibility in terms of the yields and the funding costs and the timelines. Typically, if you are doing a stress asset funding, it takes, let's say, initial 6 months to revive the asset, right? But at the end of the 6 months, you should have money in the account. Otherwise, you would have done a wrong investment, be both the developer as well as the financial institution, right? So you need to have a view in terms of timeline of 2 years, nothing more than 2 years would a fund really want to put into a stress asset. Because what happens is once you have invested into stress asset, you have changed the credit of the asset now, right? And once the assets yields cash flow, you will be in a better position after you have also cleansed your balance sheet, or the incoming developer, if it's a new promoter who has a strong balance sheet, he will eventually get a funding from a NBFC or a bank. And typically the tenors that we can look at is something like 18 to 24 months in the case of special situation funding. Overall, when developers are looking to raise any funds, you may see that, and which Sagar had pointed out, that typically funding cost ranges from 18 to 24%, right, for funds. But you need to actually see that the funding cost for a project over the timeline of the project, right? So the funds are not, most of the funds will not stay till the end of the project, right? So they, let's say the project timeline is 4 years, the funds will come for initial 18 months, right? So 18 months, let's say it's at 20%, remaining another 24 months is probably a NBFC at 15 odd %, right? So you have to look at the average cost of debt over the life of the project.
Okay. So for Navi Mumbai market, how are you all looking at it? It's just one question from this.
So Navi Mumbai, as we know, Sidco tenders require us to put down the capital as early or maybe in 2 tranches max, right? So you have the allotment letter and you have a certain timeline to make good the payment, right? But for us to be really prepared for it, right? For you, the asset, you may be knowing the asset, but for a fund, they will go through the process of due diligence. And we are very bullish on the Navi Mumbai story, right? All the drivers, be it in terms of infra, policy, the developers already being active in this market, all of these stack up well. So we are really looking forward to new opportunities in Navi Mumbai and beyond Navi Mumbai. I think regions such as Raigad, so within Raigad, Alibag, Roha, a lot of growth centers which are likely to pick up or have already picked up. There's good amount of traction that we can see at least on the land trades. So there is good drivers. On Alibag side, you have drivers because of the Revas Karanja bridge, plus you have the Digi port finally getting started, right? All of these is going to, and for every 1 rupee that is getting invested in infrastructure, there's a multiplier effect on real estate and from real estate. Yeah.
Okay, so there's a multiplier effect on real estate. So we can take this questions after the session. So since we are running out of time, so we'll just quickly move for our next round of questions to Advocate Amit sir. So we have a question for you from our side. What we have drafted was, we would like to know that how the recent RERA guidelines and FEMA also have influenced structured funding or lending to deals in real estate currently.
Good afternoon, everyone. Sorry for being late by about 15 minutes because I came all the way from town side. Firstly, thank you very much to the study circle for giving the opportunity to be together with Sagar, Praful and Siddhant. And I'm also thankful to Abhishek. At a young age now, he's taken over the reins. What Ajay Bhai has made out such a great opportunity for all of us to be together. And I think Abhishek has taken it further today. So thank you very much. And I congratulate you also for this. We are missing today Ajay Bhai, but we all know that how you are walking in the same lines what Ajay Bhai has been doing. I'll give you a brief background also about RERA. So in 2014, and why you should know this background also, in 2014, the BJP government did not have a majority in Rajya Sabha. So we had majority in Lok Sabha. At that time, Member of Parliament Anil Dave, he was a Member of Parliament from Madhya Pradesh. Now I call him late Shri Anil Dave because he expired at a very young age. He implemented RERA. After that, he was Minister for Environment, and there was very sudden demise of his somewhere in 2018-19. But when the first committee sat for RERA, so what happened, there was a Lok Sabha and Rajya Sabha joint parliamentary committee. It was headed by Mr. Majid Mehman, who is an advocate also, from Rajya Sabha, and on Lok Sabha was Anil Dave. And then they formed a core committee. The core committee had few ministers, it had few IS officers, and from Western India they had chosen us as the lawyers to draft the bill for the country, for the Union of India today. So today, whatever shape you are seeing, that we are one of the contributors today in the RERA drafting committee for the Union of India today. Now, there are lots of difference between a regular law and RERA. So one was time bound, and the civil courts were debarred from being putting an application by a buyer. So now the buyer has got an opportunity to go to RERA. Of course, consumer court is always there. But then he doesn't now need to go to civil court, which takes years and years. Sadly, some of the method in which it is implemented today, it is going very slow. You would know that it takes a lot of time for the first date to come. Secondly, there is a conciliation committee. Now they have forcefully put the conciliation committee. Now, when I am filing a case on a developer, Okay, I don't want to sit with him. Now suddenly we find that, you have to sit with him first and try to resolve the matter. If you don't resolve the matter, then the case will start. So this takes almost 6 months time for the first date to come. Now how it influences the real estate, especially in Mumbai and Navi Mumbai. Now being a twin city, both are, complementing each other in a large way. So what happens today in the real estate sector, as far as Navi Mumbai is concerned, because of the airport coming up, the entire game plan has changed. The game plan has changed for two reasons. First, a new opportunity which is available, and second is, apart from opportunity, there are lots of new type of businesses which has grown out, and there is new competition which has come up. So you are now fighting in a like playing in a blank way. You understand? So when such a scenario happens, you don't know actually what is going to happen after 3 years down the line or 5 years down the line. You know that, we are investing. Now, example I'll give you, in Mumbai, and of course that the same thing is now carried forward in Navi Mumbai also. Redevelopment is taking place. Now why redevelopment is taking place? Because there are no plots available in Mumbai. Big companies like Birla, Godrej, all listed companies. Okay. Now they are going and sitting in front of the chairman and secretary of a society and trying to take that location. Because the societies have an advantage, that is their location, their own location. So the rates vary from location to location. Example, Warsaw is a different location, so the rates are different. Lokhana is a different location, Malabar is a different location. So example, Hiranandani and Vicky Oberoi, they are bidding for a project in South Bombay called Surya Apartment. I have never seen that the top management going and sitting in front of chairman and secretary and talking to them, telling, we want to take this project. So the importance of the law, in terms of real estate has now grown dramatically. If you see the space in which the funds are coming now is huge, and all new companies are coming now. You would have never heard of the funds also. 4 or 5 companies I always used to see from my childhood days. 4 or 5 big companies who are funding. But now all new companies are coming. And they are coming from different sectors, and new type of people are doing the funding. As rightly said by Praful about the finance part, in terms of debt and equity, you would find that, the banks are very cautious. So you would know that Praveen Darekar is heading the self-development model in Mumbai. In self-development model, you would see that there are lack of funds. No one is putting funds. Who is putting funds? No one. Except Mumbai Bank, who's got a mandate from the government. Only they are the only people. In 1,000 files, only 4 or 5 files are getting cleared. That's the reality. Okay. But there is nothing to do with non-performance or non-available funds. It is being choosy. So the bottom line is like this, that in real estate today, whether it is in Mumbai or Navi Mumbai, location is the king. You tell the location and you are the king here. So I'll give you a simple example. We were uploading the RERA bar chart of a project in Mumbai, if you know the Jew Circle, and there you would know the Nobel chemist. I would never have imagined that Rustamji is bidding for a 1200 meter plot. Only 1200 meter plot. And there also they're bidding. Why? Because location. The location is so fantastic that the moment you come on that road, it is having 6 sides of branding. So what happens now? Because of the location, the rates are different. And because the rates are different, obviously, there is a lots of, either some places the inventory is not being sold, or in some places there are less inventory and there are many bidders. And so the finance which is coming is all depending upon location now. Location, नवी मुंबई एयरपोर्ट के बाजू में रहेगा तो फाइनेंस जल्दी मिल सकता है. नवी मुंबई एयरपोर्ट से आप 25 किलोमीटर दूर जाओगे, ये बोल के मैं एयरपोर्ट के नज़दीक है, द फंड विल कम एंड दे विल चेक की लोकेशन क्या है, फंड मिलेगा नहीं मिलेगा, गारंटी नहीं है. Now in terms of the question, as far as RERA is concerned, so RERA has actually done some amendment because MOFA is abolished in Maharashtra and RERA has taken over. So RERA was implemented in Maharashtra in 2017 May, and then the RERA, everything is RERA now. But what good advantage that has come up is standardization. So whether it is Mumbai, Navi Mumbai, Raigad, Gujarat, Calcutta, kuch bhi lo aap, there is a standardization of allotment letters, standardization in terms of the agreements, in terms of processes, uploading, username and password, and of course licenses to the brokers. So what is happening now, if there is a developer who is working in multiple states, multiple cities, now he doesn't now need to go into the RERA part or the law part of it. He knows that Goa में भी वही होगा, Bangalore में भी वही होगा, Calcutta में वही होगा, Delhi में भी वही होगा. So because of the RERA and the new real estate laws, the laws have standardized the real estate world now. And earlier it was builders, now it has been corporates. पहले हम लोग टाई और ब्लेजर नहीं पहनते थे, बिल्डर लोग, अभी सब टाई और ब्लेजर पहन के घूमते ज़्यादा. लिस्टेड कंपनी होगी सब लोग, ऑल आर लिस्टेड कंपनी, मेजर वन, बिग वंस, ओके. और जो लिस्टेड नहीं है वो डेट फ्री है, इसलिए लिस्टेड नहीं है. लाइक नारंग एग्जाम्पल, इज डेट फ्री. प्राइवेट कंपनी है तो डेट फ्री है. पर बड़ी बड़ी कंपनी, रुस्तम जी लिस्ट हो गया, लोडा लिस्टेड है, ओबराइज लिस्टेड है. अभी लॉयड्स ग्रुप इज कमिंग विद अ वेरी बिग IPO, रुनवाल इज कमिंग विद अ वेरी बिग IPO. See, all are coming with that because what has happened, corporate culture has taken over the real estate culture now. So we should be happy about two things today. One is standardization and structure. These two things are clearly defined by the law today, and that is why we feel it is safe to invest at any location that you take. Only the location should be saleable. That is the main bottom line today.
Right. So that was a very important takeaway, that the location is still the key today, and that drives the entire ecosystem of the project. So we can have further discussion on this, but just wanted to conclude with this session. So just wanted to know that do you anticipate any upcoming policy or regulatory changes that could impact the real estate funding model, especially in under construction projects?
Yeah, there could be, because I'll give you an example. Recently, government of Maharashtra, especially for Mumbai, they have formed a committee of 4 people. Incidentally, I'm heading that committee for giving OC to 25,000 societies whose OCs are not been received by the societies. So suddenly a policy may come up. Suddenly, we don't know. ऐसा long term planning कोई भी नहीं है कि 1 साल के अवधि आने वाला है. ऐसा कोई भी policy नहीं है. That's how policy may suddenly come up. It all depends upon demand and supply, how the things are going on. It also depends upon elections, largely. You understand? So don't take it negative, but take in the positive perspective. Okay. So policy as such को आने नहीं वाला, but I am looking at something that there could be a good amendment coming up in RERA, because there is some decisions going on at a very high level. We are also discussing that with certain ministers right now. RERA currently comes under the housing minister, that's Mr. Khattar, who was former chief minister of Haryana. He is the apex body today, apart from the law ministry. So I am looking at a major amendments coming up in RERA, and that should be as early as about 6 to 8 months. The discussions are going on right now. See, consumer courts and RERA, these have been largely made for consumers only. Largely, okay. थोड़ा महाराष्ट्र में, मैं तो खुद ड्राफ्टिंग कमेटी में था, तो मैं खुद भी नाराज़ हूँ थोड़ा सा कि ये कंसिलेशन कमेटी क्यों बिठाया है, ओके. बट अभी ठीक है, जो हो गया है. बट यू वुड नो दैट the people who have been heading the RERA are either some municipal commissioners or the people who know the subject from the builder's angle also. So, of course, the amendments which are going to come are going to be more customer friendly, consumer friendly, buyer friendly. Yeah, I am looking at about 5 or 6 main clauses which may come up for amendment, but I think that is all consumer friendly.
Okay. So let's hope that there will be more consumer friendly policies coming up. We are also waiting for that OC policy to come soon. So just to wrap this up, I just wanted to ask to all our panelists that what is the one major mindset shift needed in this industry to attract long-term capital and sustainability? Like Amit sir said that now there is a corporate culture that is taking over into real estate, and there is a lot of standardization and organization that is being setting in. So there are a lot of things that transparency, like the policies, a lot of things they have to be transparent with the kind of agents are there, with the timelines and everything. So if you all can just guide us, because they are there, we might not get a chance to ask this question directly with the experts. So if you can just give your own perspective to this.
For long-term capital, see, capital is flowing in. There's no denying that. There's good FDI inflow. There's good FII inflow, right? Any real estate listed company you take, FII holding will be stacking up somewhere between 5% to 15%, which is a good amount of capital being poured in from foreign investors, right? Long-term capital is a function of both the supply side, the developer side, from the developer side, as well as from your city side, right? The corporation side, right? So the kind of infrastructure that is getting built, right? The pedigree of the developer, right? So long-term capital will come, right? As long as we are able to, and like sir has mentioned about location, for someone with underwriting capital, his consideration is location plus timeline, right? So whatever we are doing, right, it has to have a timeline, right? It has to have a tolerance margin. कि ऐसा नहीं है कि प्राइस इधर होल्ड करेंगे, ऐसा नहीं कि प्रोजेक्ट अरे रेरा में तो 24 महीने के बाद वाला डेट है, कस्टमर को मैंने पोजीशन बोला है ऑन पेपर इज लेट्स से 24 मंथ्स, लेकिन रेरा में है ना मेरे पास, वैसा नहीं है. एवरीथिंग दैट यू डू टुडे इज गेटिंग हाईलाइटेड. पहले वर्ड ऑफ माउथ होता था, प्राइजेस एवरी ऑल्टरनेट मंथ बढ़ जाते थे. उसी तरीके से इतना फास्ट इंफॉर्मेशन फ्लो हो रहा है विथ इंस्टीट्यूशंस, राइट? If certain developer has done something to the landowner, to the society, to anyone in the stakeholder or ecosystem change, that words come to us also, right? And it's, the word is prevalent in the industry, nothing beats the word, right? So if you have to attract long-term capital, we should be firm with what we are committing, and we should do it grade A, right? तो यार affordable housing कर रहे हैं तो उसमें भी grade A करना है अपने को, right? So all of these things will help us attract long-term capital and also kind of ease your cost of equity.
Okay. So
yeah,
I'll add something very interesting. So I was heading Ginger Hotels. I don't know if you know Ginger Hotels. Ginger is a 3-star brand of Tata Group. पहले ताज है, फिर ताज के बाद another version is there, and then there is a Ginger Hotel. So an extension of what Praful said just now, of course, location. Location is the king for real estate today in every way. You see, funds also come based on the location only. Okay. Now, when the Ginger Hotel was launched, and this you should know why. So it was made on the concept of Dr. C.K. Prahlad, and that book was called Fortune at the Bottom of the Pyramid. या book का नाम याद रखना. So Nano, Ginger, then Kent water purifiers, ये सब बने थे on the book called Fortune at the Bottom of Pyramid by Dr. C.K. Prahlad. So when the first time that concept came and he was taken on board for making a formula for Nano car and Ginger Hotels, he came and told that for hotels, okay, only location is important, rest everything is not important, okay. The fund flow, everything will automatically come the moment you choose the right location. So I'll give you example 3 locations, okay. So one of the locations was IRCTC, यानी अब दिल्ली रेल निवास. So at that time, Lalu Prasad was the railway minister, and it happened to that Tatas were bidding for that location of hotel. वो hotel कहाँ पे? दिल्ली स्टेशन के बाहर. अब बाहर निकल के सामने आपको IRCTC दिख रहा है. That IRCTC was converted into Ginger Hotels. Okay, in that year, it was somewhere in 2000, I think 5-6 का बात है वो. तभी वो लोकेशन पे occupancy level, when it was IRCTC, okay, it was 20, 30, 40%. The moment Ginger took over, I myself being the employee of Tata Group, I never got a room for 6 months. I had to pitch for a management quota to get a room there in the hotel. The same happened when Ginger Hotel was launched outside Mumbai airport. आप देखो बाजू में सहारा स्टार है, उसमें IBC और उसके बाजू में जिंजर होटल है. Same situation, That location जब वो start हुआ ना, for 2-3 months it was completely full. 2 reasons. One, because of the quality. कि we are assured it's a quality hotel है, brand है, तो it will be safe, hygiene, ये. And second is the pricing. So what happened? सहारा स्टार वहाँ पे रूम बेच रहे 15,000 में और जिंजर बेच रहे 1,500 में, दोनों बाजू बाजू में. ओके, लेकिन परसेंटेज ऑफ जो ऑक्यूपेंसी है, जिसके लिए ARR एवरेज रूम रेट वो जिस से बढ़ गया, जो 1,500 का रूम था वो 6,500 में बिक रहा है, ओनली बिकॉज ऑफ लोकेशन. एंड सिमिलरली व्हेन जिंजर स्टार्टेड अनदर होटल इन अंधेरी ईस्ट, तेली गली में अनदर होटल स्टार्टेड, उसको ऑक्यूपेंसी बढ़ ही नहीं रहा था. आप कितने मार्केटिंग करो, बढ़ ही नहीं रहा उसका. बहुत सारे इंसेंटिव किए, कुछ किया, स्टिल यू नॉट मीट दोट एक्सपेक्टेशंस. सो आई थिंक फंडिंग एंड लोकेशन एज फॉर रियल एस्टेट इज कंसर्न डो गो हैंड इन ग्लो. एंड आपका फंडिंग आपको चीपर भी मिल सकता है इफ द लोकेशन इज गुड, बिकॉज उसको मालूम है कि उसका रिटर्न जल्दी आने वाला है और रिटर्न बेटर आने वाला है. सो दैट I think we should all take care and understand one thing, that in real estate our location is most important today. इसके लिए.
Give my bit. Okay, to attract a long-term capital, market has to be ready. What I understand, Navi Mumbai market is ready now. But what is happening, most of the allotments are happening from SIDCO, and payment for land component, a developer is arranging either from their own kitty and through family and friends. There is unsecured loan they are raising, right? So, what I understand, the AI funds are ready to deploy funds towards land component, okay, and break this unsecured loan cycle. Meaning, developer don't need to depend on unsecured loans. They can approach AIF who are, more than willing to fund them. And, with this, practice setting in, I think long-term capital, this market will be able to attract long-term capital.
Nice. Siddhant, do you want to add something to it?
Takeaway from this discussion is short and sweet. That is, land is limited. The FSI will increase, but land will not increase. So focus on the land and invest in the land nearby Navi Mumbai International Airport till the radius of the 20 to 25 kilometer, which is the MMR region. Yes, thank you.
Okay. So that was quite insightful. The land and the location is primary important, so that a lot of developers over here can take a key takeaway. So Sagar, I just wanted the last concluding question, because I asked everyone. I wanted to ask this one particular question to you. What is your advice would you give to the emerging developers seeking capital in a challenging or a very regulatory environment, or for a very difficult project?
See, emerging developer, there has to be a discipline. Okay, if your emerging institution understands, you are emerging, and you will come up with some background. One cannot start a real estate business the next day if he doesn't have a background. If you have a background and backup, if your emerging institution still understands and supports you, but it has to, one should be disciplined about their project, and particularly so one is emerging. They would also be concerned about their goodwill, so they need to focus on the project itself. It's a design, it's a marketability and sellability component, and stick to the principle of using a fund of a particular project in that particular project only. Cash out and all can happen, but needs to be disciplined about your utilization of the funds.
Okay. Praful, do you like to add something to this?
So like Sagar mentioned, break that chain of the unsecured loans that you use for funding the initial amount, right? Because if you are able to get institutional capital, you diversify your capital base to a very great extent, right? First funding will be difficult from any fund, right? It may take months for you to crack that funding. It's not easy, right? Because everyone is doing relative benchmarking, right? There's a location, best location कौन सा है within the developers. Even in India में अगर एक fund को 10 ही deal करना है, right? तो you can imagine क्या चांसेस हो सकता है एक डेवलपर को फंड मिलने का, एंड दैट्स हाउ द रियल एस्टेट मार्केट वर्क्स. 7 लोग को फंडिंग चाहिए, एक को ही मिलता है. दैट्स द रेशियो बिटवीन द आस्क फॉर फंडिंग एंड द डिप्लॉयमेंट, राइट? So break the chain. Second, governance measures, right? What sir is saying कि corporatization हुआ है, right? But you are investing in land, thinking land is your only asset, but your corporate governance is the second most important asset, right? For that also you have to invest. So you have to have people, processes, product design, the entire development cycle, how seamlessly you can manage, right? Finally, we are all aggregators, right? We are financing an aggregator who is aggregating a certain set of services from government, certain customers, certain designers, right? It's a show that we try and put up, saying कि भाई this has to be seamless, ताकि अपना 2 years, 3 years, 4 years में अपना close हो जाए project, right? So you have to have good governance measure. Second, and most importantly, a lot of developers will be facing this question. They'll be facing this question: ki succession planning, right? Funds are also now asking ki what is the succession plan? ठीक है, the promoter has done well for him, but if the family is not involved in the business, who is going to carry the mantle forward, right? So you have to think from all perspectives, right? And maybe emulate a Hiranandani or a Lodha or a Runwal, right, in your own way at your firm.
Okay.
Couple of I want to give you a couple of examples. Attracting long-term capital and a discipline. So what happened, when I was with L&T 10 years back, there was this proposal came from Titwala, and it used to be, affordable project, okay. So I had just joined L&T, and I thought, who would go to Titwala at that time, 10 years back. But I went and I saw the project. It was a massive, massive construction. I had never seen that kind of a massive construction in Mumbai in entire my life that time. So what happened, I recommended small funding of 20 crore to my management, and management agreed to, give them a funding. The important part was that time, he was the first time a borrower that time, and 20 crore was a start for him. Later on, a couple of years down the line, he was enjoying credit line of 300 crores from a couple of more institutions. So the point is, if you are disciplined enough, you will be getting more and more capital funding from the institution. Institutions are there to support you. I want to give a couple of more examples. There was one of the, very prominent developer used to be operating one of the flat in Bandra. He took a bet on BKC, and he is doing, he has a lot of good projects now. Why? Because, institution backed him. So, discipline, and if you have a discipline, institution would back you, and you can do wonders with your business.
Okay.
I think on the funding part, the people who are funding the projects, they only see one bottom line exit plan and how quickly the exit plan is there. And I think he being the best in the industry as far as the funding is concerned, he would agree with that. That the moment he is going to deploy some money on some project, he would only see at what rate I'm going to get a quick exit, so that he can redeploy it again somewhere else. So I think that is the main bottom line as far as financing is concerned.
Right. So I think that was on the closing note. That was all. If the audience, anyone has any questions, they can ask directly to the panelists. With regards to funding, if anyone has any question, we are just have time for another 10-15 minutes before we close this.
Sir, what timeline you expect for an exit? Because from the day you disburse the funds to a project, like the AIF or any institutional funding, what timeline you are expecting yourself to be getting exited? Because many times what happens, by the time you would like to exit, by the time, let me repeat the question. The question is that what timeline are you expecting from the developer, so that developer will have enough time also to take a project to a certain level? Because many times what happens, after 2 or 3 years the project may come to a halfway only. So what guarantee is available from the AIF that they are with the developer for a certain period of time or certain level of the construction completion? Because your name is also attached with the project, so that is also a goodwill or a brand to the project itself, the sellability. Moment you try to exit, it will be difficult for the promoter to continue with the same level of enthusiasm for the project.
Good question. So, see, it's a high cost funding, right? You would want to get the exit done to that AIF as early as you can, right? 20% पे आपको रखना है क्या funding? अगर आपको 15 पे मिल सकता है, and if you have used the money from the AIF at the right place in the right time, your project will progress, and AIFs also understand that there's certain delay, there's certain things which is beyond the control of the promoter also, right? But within, let's say, 2 years, if you are able to launch, get the project out of ground and get the repayments done, you can get this entire facility refinanced by a bank, by a NBFC, right? So we understand we have to stay in the project and we can back the project end to end, but exit is what we really be very sure of कि 2 साल में अपना exit हो सकता है नहीं हो सकता है. फंडिंग का कॉस्ट ये है, इफ इट स्टार्ट्स ईटिंग इनटू डेवलपर्स मार्जिन, तो आपका भी इंटरेस्ट चला जाएगा बाय द टाइम द प्रोजेक्ट इज नियरिंग कंप्लीशन, राइट?
Anyone else over here? Oh, I think there's one
Hello.
question.
Sir, actually you were saying these projects which is even under NCLT can be funded. You know, someone who is coming to take over bid, doing the bid, and funding can happen over here. See, projects like Lavasa, which has got 10,000 plus acres of land, consortium of 17 financial institutions, 1,000 plus customers waiting. Okay, so there are bidders. Why? What is holding back? Is it the lack of fund or is it political issues? What exactly is holding back? Because I have seen there are a lot of bidders coming up, like Lotha and not many good companies. Okay, so I have invested in Lavasa. I am one of the losers in that perspective. So I am waiting for opportunities, good bidders to come take over this project. Okay, so would you be recommending a builder or a developer, if they are coming up to take over Lavasa, with your consent to fund those projects?
So I'll answer in 2 parts. One, of course, the NCLT, and one is the demand and supply. So currently, as a law firm, we are looking at about 800 odd projects of redevelopment today in Mumbai itself. Okay, I'll tell you what is the difference now and what is what earlier. So earlier, what happened? It's purely demand and supply. Today what has happened, there are that few 100 developers are there in Mumbai who are there in every project. Maximum 110, 120 developers will be there. Okay, but the opportunities are huge. Every second or third building is going for redevelopment. Okay, that is a part of Mumbai. Now let's come to Navi Mumbai. Navi Mumbai, because of the airport, lots of greenfield ventures are there. So there are lots of opportunity available for a developer today. He has a lot of choice. So he may put his bid for 5 projects, whereas 50 are available. And he's become very choosy. Because every now and then, things bottom line, there is only one thing, the developers are limited. So example, Loda is pitching, or Piramal is doing, or Suraksha is pitching. So I'll give you example of HDL. So HDL, when that Patrachal case happened, and then the entire company was put in the NCLT, government did ABC things, I don't want to go to the jail part and all, okay. And the entire company was taken over. So did it happen in Lavasa also. So it happened with Ambivali now, it's going to happen very soon. But the fact is that only there are that few players who are the takers. Why? Because you require huge funds. So if you are waiting for someone to come and take you over, okay, it may take time purely because they have a lot of choice available today. You are sitting with your asset, but he has lots of choice available. So again, question is that only, location. So what may happen sometimes, na? So you would know that Bhada has taken on a CND policy, cluster and development. So one was Abhyuday Nagar, then second SVP Nagar, if you people know in Andheri West, SVB Nagar is there. There 2 developers taken over. Then Bandra Reclamation has been taken over. MHADA has become the managing committee of a society. And they take over the entire project. And give it like GTB Nagar, awarded to Rustamji. But what the difference is there, Rustamji had a lot of other opportunities available. Now he has got 50 projects in hand and he is being choosy. I'll take only these 5. But these are the 5 in which I'm going to get maximum profit. And he also looks at exit. See, every developer who puts money is also going to look at exit. Na? कि ये 4 साल में खत्म होगा और 5 साल मेरा OC आ जाएगा. And I'm out of the project. So, NCLT से जो project आते हैं, okay, पहला बात तो I'll give now best example is Tulip Star Hotel. जो पहले सेंटोर था, जूहू पे फिर टुलिप स्टार हुआ, and now Lodha is taken over and another new project is coming up there. Okay, जिसका pitching price अजित केरकर was the chairman of Tulip Star, he was saying ये मेरा project 4,000 करोड़ का है, 4,000 करोड़ का है, जिसको 4,000 करोड़ का तो मेरे को खरीदने को आ जाना, and that in NCLT 700 करोड़ में गया, 700 करोड़ में. You understand the difference? Okay, again what happened? वो साइज का प्रोजेक्ट लेने वाले के पास पैसा कितने लोगों के पास है, उतना आपका इन्वेंट्री ब्लॉक है, पैसा ब्लॉक होने वाला है, 5 साल तक कुछ नहीं होने वाला है, 700 करोड़ मेरा ब्लॉक है, ऐसे पैसे कितने लोग के पास है? प्रेस्टीज के पास होगा, लोढ़ा के पास, DLF के पास होगा, दिल्ली से आए हैं, ऐसे गिने चुने में एक नाम है, ऐसे तो 50 लोग रहेंगे, बड़ो 50 गिने चुने लोग हैं. सो NCLT में भी पैसे डाल के प्रोजेक्ट लेना मीन्स दिस इज ब्लॉकिंग ऑफ द मनी. एंड देन उसका एग्जिट OC आने तक का वो भी एग्जिट जल्दी होने नहीं वाला है. देखिए रेरा नंबर आने तक आपको बोले रेरा भी आता है, पहले IOD के आता, अभी CC के बाद आता है. ओके, रेरा नंबर आने तक तुम्हारे 40 से 50% पैसे घुस जाते, यानी 50% ऑफ द प्रोजेक्ट कॉस्ट आपका रेरा नंबर आने तक ही घुस गया है. उतना पैसा किसके पास है? तो जिसके पास भी है वो क्या करेगा, वो वही प्रोजेक्ट लेगा जो उसको जल्दी एग्जिट मिलने वाला है या उसका टॉप लाइन बड़ा अच्छा होने वाला है. सो दैट इज वाई आपका प्रोजेक्ट बिकेगा, नहीं बिकेगा ऐसा नहीं, लेकिन टाइम लगेगा, यानी टाइम लगेगा, जल्दी कल भी जा सकते हैं, ऐसे नहीं बोले टाइम लगेगा, बट रीजंस बताया क्यों टाइम लग सकता है, रीजंस बताया मैंने आपको.
Okay, so I think we can wind up for today's session. The tea is there, that is there, so we have a limited hold time, and meanwhile if there is any questions you all can directly send to us, and we would definitely we would thank all the speakers over here to remove their precious time out and come and enlighten the audience over here. We at Real Estate Study Circle want to bridge the knowledge gap for various professionals who have, in current scenarios, they don't have any guidance or they don't have anywhere to go other than going and paying a professional fees. So we want to take up more critical questions and want to have this kind of intense debate. So we would thank all our audience today over here, and any questions for the panels, you can get in touch with us directly for this. Thank you for coming, and you can enjoy the session snacks over networking.